Every once in a while, a big player on Wall Street makes a call that just gets everyone talking. Well, today, we are diving deep into one of those moments. We're talking about a really bold prediction for Tesla, coming from one of the absolute biggest names in finance. Let's break it all down.
And there it is, $460. That's the number. That's the headline that's been making all the waves. Now, when a price target this ambitious drops for a company as closely watched as Tesla, you kind of have to stop and ask, what exactly do they see that maybe the rest of us are missing?
And look, this isn't just some random guess. This call comes straight from Bank of America. They reaffirmed their buy rating on the stock. A buy rating is already a pretty strong signal, right? But when you pair it with a specific high target like $460, well, that's a major, major statement of confidence.
So that leads us to the big question, doesn't it? A number like that, it needs some serious backup. What's the real reasoning behind Bank of America's super optimistic stance? Turns out it's not just one thing. It's really a combination of a few key factors.
Okay, so the bank's whole argument really rests on what we can call three distinct pillars. We're going to deconstruct this bull case. That's the optimistic pro-growth argument for all you market watchers, pillar by pillar, to really understand the complete picture they're trying to paint of Tesla's future.
So here's the game plan. The argument kicks off with AI. Then it moves into the company's financial health. We're talking profit margins. And it wraps up with the huge growth in its energy division. So let's tackle these one by one. First up, AI and autonomy. And honestly, this is huge. The core idea here is that if you think of Tesla as just a car company, you're making a mistake. The analysis sees Tesla setting itself up as a true leader in artificial intelligence. This is all being driven by its progress in full self-driving and, of course, the expansion of its Dojo supercomputer. This literally reframes the entire valuation of the company. It's not a car company anymore. It's a tech company.
The second pillar is all about the money, the bottom line, stabilizing those profit margins. Now, as you probably know, Tesla's been through a pretty intense period of price cuts, and that really squeezed their margins. But the belief here is that the worst is over. The bank is basically betting that the margins have finally hit rock bottom and are now set for a big recovery, and that's a massive indicator of financial strength.
And pillar number 3, it's all about energy. Now, this is a part of the business that, let's be honest, sometimes gets overlooked. But Tesla's battery storage division is growing, and it's growing fast. The analysis is pointing to this unit becoming a more and more significant source of revenue, essentially adding another powerful engine to the company's growth machine.
Okay, so we've got the three pillars: AI, margins, and energy. But why does one prediction from one bank cause such a stir? Well, this is where we need to look at the broader market impact. You see, a prediction like this creates a ripple effect. When an institution as big as Bank of America sets a target, it's way more than just a suggestion. It's a signal to all those institutional investors and fund managers out there. And believe me, they take these analyses very, very seriously. It can directly influence where billions of dollars end up getting invested. But, and this is a big but, before anyone gets too carried away, it is absolutely essential that we pump the brakes for a second and inject a serious dose of reality here. A prediction is just that. It's a prediction. It is not a guarantee, and there are always other factors at play. There are really two sides to this coin. The bull scenario, the optimistic one, it relies on the market continuing its upward momentum and investors having a risk-on appetite, feeling confident enough to buy into higher growth stuff. But the bear risks, they are very, very real. A slowdown in the economy or other big picture pressures could bring back volatility in a heartbeat and just throw any forecast completely off course. And this all brings us to a really crucial point. We have to remember what a price target actually is, right? It's an educated estimate. It's based on a model, sure, but the future is, well, it's unpredictable. It represents one possible outcome, not something that's written in stone. So this all leads us to the final and maybe the most important question that a prediction like this forces us to ask ourselves. How should we really be interpreting this incredibly bold call? So what do you think? Is this analysis from Bank of America the opening bell for Tesla's next major rally? Or is it just another piece of hype in what we know is a very volatile market? The source material leaves us right there with that question. And ultimately, it's a reminder that every investor has to weigh the bull case against the bear risks and then decide for themselves.